I'm market analyst with Forex.com. Forex.com is part of StoneX Group. StoneX is a Fortune 500 company. It is listed on the Nasdaq exchange. It connects global markets from commodities, precious metals, to all the way towards the financial markets. So part of StoneX is Forex.com, which is the retail side, the broker side, connecting markets, clients to CFDs, commodities, indices, and major markets to be able to trade. And being as a market analyst, I share market analysis insights across Forex.com platforms and StoneX platforms for more risk-aware decision-making while navigating these markets. The markets are always changing. It's not static. It's always changing, and strategies require to be robust, navigating these trends. And we're seeing also trends entering a new era. We're seeing different types of risk management that's supposed to be approached to several sectors, especially that we saw this year, like gold and silver trends reaching historical records in terms of price, in terms of momentum, in terms of liquidity, in terms of margin requirements. So we saw a different era shifting into the markets, which affected companies from across the globe. So this approach to risk across the markets with the price action in line with the whole macro perspective is always good and insightful for anyone managing a portfolio. Mainly the diversification inside of the portfolio, given the high volatility that's happening across the globe, and also being aware of the rotations that we're seeing. And now we're seeing rotations across the US equities market. This is inside of the US, but we can also see China drifting away from exposure from US-denominated assets, and treasuries also diversifying from the US economy. So this diversification is essential given the high volatility environments, given the high political and geopolitical risk across the globe, to be able to moderate any types of impact or losses within the portfolio. And of course, with risk management and strategies adapted to the risk management initially before the exposure to the assets that we have globally. Generally, across the globe, we're seeing less passive we have lots of passive investment, but we're seeing also industries or assets that were more towards the passive side, like fixed incomes, now being more actively looked at or invested in, given the fast change in expectations for policies across the globe and for the whole trajectory across the globe, also under the Trump administration. So we have lots of shifting policies, lots of shifting headlines that's affecting volatility on a global scale and not just from a specific asset scale, which requires caution with respect to the management of this volatility, which can range all the way from watching out for position sizing that might not be as traditional as it was before, to the way the whole risk aspect of each investment or each trade is placed. So the most also interesting topic that is trending and is expected to continue trending for the years to come, which is integrated in global economic agendas, which is AI. So the use of AI tools across portfolio management, across analysis, across every single aspect in the investment world and globally is increasing or is being integrated rapidly. Now, there are concerns over the efficiency of this AI in replacing the humans, and we also saw the cyclical rotation out of AI that we saw in the US with profit sustainability risks. The topic of AI always stands out, not just from stock exposure perspective and investing in the Nasdaq and anything related to the tech and AI, but also balancing it out and using it and investing in it at the same time is something that is good to look at, given it's a very close tie to us in our day-to-day work and investment field. AI has the ability to replace lots of jobs globally, but the way that we're currently seeing it right now is that the human brain, our professions in line with AI, us using AI to be able to amplify our skills is currently, at the current moment, is the best way to go, given the balanced touch and the need for AI to have this human touch input to be able to amplify the delivery, because sometimes AI can give a static delivery, but from our perspective, we can give it a more human touch that is able to connect with the industries that we are working in.